I'm Brad Stone, in for Emily Chang. This is Bloomberg Technology. Coming up in the next hour, we just became a real car company. Those are the words of Tesla CEO Elon Musk after reaching his goal of building 5,000 Model 3s in the final week of June. We'll have reaction and analysis. Plus, Dell is going public again, offering a cash and stock deal worth $21.7 billion, entering a new stage of a multi-year turnaround plan. And more institutional investors are diving into cryptos, and Coinbase is taking customers. How one of the world's biggest crypto exchanges plans to sign billions under management by the end of the year. But first to our top story. While Tesla engineered a late quarter production burst with the Model 3, it delivered fewer sedans to customers in the second quarter than expected. However, the late surge has thousands more of the cars in transit towards buyers. And for the first time, Tesla exceeded its target of building 5,000 Model 3s in a single week. Joining us now from Los Angeles, Tigris Financial Partners Chief Investment Officer Ivan Feinseth. Also with us in New York, Bloomberg Business Week's Max Chafkin. Ivan, let's start with you. A somewhat muted reaction on Monday's trading session to Tesla's news, even though it did cross its benchmark. Why Wall Street's understated response to Tesla's news today?
Well, no, I think the response, the stock is down because of auto trade issues more than it's up because of the Tesla meeting the milestone, but it was up in the morning, and I think the fact that they have now produced 5,000 Model 3s in the week is very powerful and very positive.
Ivan, the big question is it sustainable, right? All-nighters, tents outside the factory, 5,000 cars is a great accomplishment, but is this now a company that can routinely make 5,000 Model 3s every week?
I believe they can. I believe the factory has more than enough capacity to produce the cars. They are in a facility that once produced over 1,300,000 cars when it was a GM factory in the 70s. So there's more than enough capacity. Plus today they have one of the most advanced auto assembly lines ever made. So I think that they will be able to sustain the production level, and this does take Tesla to the next level of taking it from a niche car producer to a mainstream auto manufacturer.
Max Chafkin, you've covered Tesla for years. Elon tweeted on his 47th birthday that he had spent the night in the factory. I mean, they can't take a break, right? There's a lot of pressure on this company. Can they keep it going? Is this the turnaround that perhaps some Tesla watchers hope it is?
I mean, I think you have to hope that the way Elon Musk has been sort of living, where it seems like he's been up all night, he's sleeping in the factory, you got to hope he's going to at least take a day or two and just, rest, because all these Tesla employees, as he indicated in this email that Bloomberg published yesterday, have been basically working nonstop to hit this milestone. Now, I think what they're doing now is not sustainable. The hope is that they will, as time goes on, they will be able to improve the sort of robotic manufacturing line, and that'll be able to get them up to around 5,000 cars. So the idea would be to hit the same kind of production number without looking like, and feeling like you've been punched in the face, every day, which has kind of been what's happening to Tesla.
Ivan, Elon tweeted, or he emailed employees, I think we've just become a real car company. That's pretty ironic considering the market cap of Tesla exceeds many traditional car companies like GM and Ford. Why did he write that?
Well, because the Model 3 production level is the transformational car for the company. It does take them from a niche car producer, which originally started producing, selling 20,000 cars a year, to getting to 100, which could be at the 12 months from now, if they maintain the Model 3 production rate, producing over 600,000 cars a year, which makes them a real company and they're then able to fill what is very strong demand. And then they roll out the production of the truck next. So they are evolving. But I think that they view themselves more of a technology company than a pure car company, because they do sell solar panels and the battery walls as well.
If you're a Tesla customer who's had an order now for a while on a Model 3, does it concern you at all that perhaps your automobile was made in a tent outside the primary factory? I guess it's another way of asking, do we know whether Tesla has cut any corners, Ivan, on the quality of these automobiles?
Well, only time will tell that, but overall quality of Tesla's cars are very high. The customer satisfaction level is very high. The enthusiasm for the car is very high. And really the strength in the car is its simplicity and the power and the design and the technology. And they've had very few mechanical or technological issues, and they do fix a lot of, they monitor all the cars and do fix a lot of the software issues by pushing down software updates from satellites. So they are always adjusting and improving the cars that have been on the road for a long time.
Max, Elon's Twitter feed has been such a joyful circus show over these past few weeks and months. I don't know, does the company have to grow up now, or are we going to continue to be entertained by Elon and his pushback on some of Tesla's critics?
Yeah, I mean, I have to say, I think the real car company thing, he was sort of joking. I think Elon has felt for years that Tesla is a real car company, and that was kind of a dig at, at skeptics. I think one thing that's noteworthy about this big push to hit 5,000 is that this is the first time that I can think of where Elon Musk has really sort of paid attention to what Wall Street and what outsiders are saying. Outsiders said, you have to hit this milestone, and he basically said, okay, I'm going to do whatever it takes. We're going to, as he said in the email, fly, production lines in cargo planes. We're going to build this giant tent. We're going to do everything we can. And I think that is kind of interesting. It strikes me as a concession that he's made, both to Wall Street and the outside world, where he has to start acting sort of more like a conventional publicly traded company.
Ivan, you mentioned some of the upcoming milestones, the new benchmarks that Tesla will have to meet. Are they going to have to go back to the capital markets and raise more money to do things like the truck?
Absolutely, they need to, and they should. But however, the meeting of this 5,000 car milestone will make it a whole lot easier if they indeed become profitable by the end of the year, or at least are on track to do so by the end of the third quarter. Will also make it much easier to raise capital. But yes, building cars is a very capital-intensive process, and they will have to, and they should raise money because they've, excuse me, every time they've come to the capital markets, they've gotten well received. So I think that they will come at the end of the year.
Max, last question to you. We started the conversation by talking about a little bit of the underwhelming market reaction to Tesla meeting this goal. Has some of the halo, the glow faded from Elon? Are the markets looking at Tesla maybe a little bit differently these days?
No, I don't think so. I think the reason for the muted reaction is that this 5,000 milestone was like a terribly kept secret. And I think by design, Tesla, through emails from Elon Musk, and if you're reading his Twitter feed closely, they were telegraphing this for about a week. So I think basically people knew they were going to hit it. There was just some question of, how they were going to do it. And I think we still don't know exactly how they were able to hit this milestone. But you got to think, this is a big moment for Elon Musk, big moment for Tesla, and for electric vehicles in general. I mean, 5,000 cars is nothing to sniff at.
Okay, Ivan Feinseth of Tigris Financial Partners and Bloomberg Business Week's Max Chafkin, thank you both for joining us. A story we're watching. In an effort to cut costs, HTC is laying off 1,500 employees in Taiwan, about a quarter of its total staff. The scaling down comes as the smartphone maker struggles to hold on to market share from Apple and Samsung and newer players like Xiaomi. You may remember HTC offloaded about 2,000 engineering jobs to Google as part of a larger deal with the company just late last year. Coming up, what's old is new again. Michael Dell is taking the company he built from the ground up back to the public. Next. And if you like Bloomberg News, check us out on the radio. You can listen to the Bloomberg Radio app, Bloomberg.com, and in the U.S. on Sirius XM. This is Bloomberg. The world's largest private tech company is going public again. Dell is planning to return to the public markets by buying out its tracking stock in a cash and share swap deal valued at $22 billion. In January of this year, CEO and founder Michael Dell preached the benefits of remaining private.
As a privately controlled company, your time horizon is very different. And so you start, you reimagine your business. You think about your business in years and decades. And it allows you to reconceptualize, how you're investing and what the real priorities are.
Bloomberg Technology's Nico Grant covers Dell and joins us here in the studio. And in New York, Bloomberg opinion columnist Brooke Sutherland, who's been writing about the Dell move. Nico, let's start with you. This is not a traditional IPO, yet Dell is going public. Tell us how they're doing it.
Yeah, so this is a direct listing that would be more akin to, say, Spotify's direct listing that we saw recently. The idea is that Dell gets all of the benefits of going public with none of the drawbacks. You're not seeing Michael Dell going on some roadshow and convincing investors you should invest in my company. And you're also seeing that it gives him a tremendous amount of control. In the process, it helps to simplify Dell's corporate structure because tracking stocks are obviously very unusual. It was meant to mirror the value of VMware, a software maker based here in Silicon Valley that Dell has a controlling stake in. And so it gets rid of that. It has more direct control over VMware, and it also gets to float on the public markets and get all the valuation benefits, get all of the share benefits without traditional drawbacks.
Brooke, you called this in your opinion piece today the path of least resistance for Dell. Why?
Because I think the thinking among VMware shareholders was they very much wanted this to remain a publicly listed independent entity, and they did win that today. I guess at the cost of an $11 billion special dividend that'll fund the cash component of the buyout offer for the tracking stock. But, that they pushed very hard for that. They were very vocal in wanting VMware to remain an entity that they could invest in as a standalone. Now, as I argue in my piece, winning that is not necessarily the best outcome for all involved here, and I really view this as more of an intermediary step. It does help Dell simplify its structure, but it doesn't go far enough, at least in my opinion. You still have VMware for, as much as shareholders wanted to push back against being part of Dell, it is very much part of Dell. They have a majority shareholder that calls a lot of the shots for the company, and most stocks with that kind of dynamic do tend to trade at a discount.
Nico, we just listened to Michael Dell singing the praises of being a private company. That was not that long ago. What's changed?
I actually saw him in April singing the praises of being a private company. I think what's changed is a couple things. If we consider the timing here, it comes about 5 months after Dell said it was considering its strategic options, and it comes about 5 years after the company started this big turnaround when it decided to go private. It saw that the hardware landscape was changing around it, and it really needed to try to figure out how it could catch up. It thought the easiest way to do this was with the least amount of scrutiny possible. And so I think that Michael Dell is feeling more confident than he has in a while. We saw in the last quarter, Dell saw double-digit gains, particularly in servers and in storage. It has been a really good IT spending environment after years of either sort of middling or declining IT purchases by companies. And so he thinks now is the time to, again, get all the benefits, which could even include M&A benefits. He could do a share swap in the future rather than having to pay cash, because that's a precious resource. They don't have, a tremendous amount. They do have to pay down about $40 billion of core debt.
Brooke, though, it does seem like we've seen this movie before, and Dell sort of famously belly flopped as a public company, particularly as the cloud transformation swept over the enterprise computing space. Are you confident that it is different this time around?
I think the proof is very much going to be in the results, and I think we have to see how they handle this. To me, this doesn't necessarily solve a lot of Dell's problems. A lot of the reason why they were looking at these types of transactions in the first place is because the company is burdened with a very significant debt load from its buyout, from the 2016 purchase of EMC, and it has to find a way to deal with that. And a lot of the thinking was that it would use VMware's balance sheet to shoulder some of that burden. Now, obviously, that's not happening. As Nico says, that this does not rule out the option of potentially merging with VMware down the road. But again, then I just come back to this is more of an intermediary step than a long-term solution.
Yeah, so what is then the next step? It's you think it's a potential merger with VMware or a direct IPO, sell more stock to the public?
I think potentially, but also we have to get this deal for the tracking stock done. I mean, I will point out Dell is paying a premium for the tracking stock, but you're still talking about a very material discount to where VMware shares are trading. And there are some big holders of that tracking stock. So Elliott is one of them. Carl Icahn has said he's a holder of that tracking stock. So is this going to be good enough for them? I think that's something we're going to have to watch.
Nico, last question. Talk a little bit about the competitive environment that Dell faces right now. You've got HPE and NetApp. You also have the big cloud providers like Amazon and Microsoft. So how does Dell fare as a public company considering the competition?
So I think, comparison to HPE, which is one of the closest companies, Dell will probably, in the short term, should it get past, the investors and get this done in the fall, trade higher and with more momentum than HPE, which has been challenged. I think part of that is because of the close integrations with the software makers. Dell also, we have to remember, leads the market in so many of these categories when we think about hardware. And they're leveraging VMware as much as possible, which has a lot of credibility among companies that want a more modern infrastructure when we think about IT. And so I think that when it comes to the public clouds, Dell probably will not see their explosive growth. And should we see the IT spending environment, sort of cut back a little bit for the hardware vendors, then, Dell's stock is going to take a beating.
Okay, Bloomberg's Nico Grant and Brooke Sutherland, thank you both for joining.
Thank you.
Coming up, e-cigarette maker Juul is seeking more than $1 billion in its latest funding round. We'll discuss how the company is expanding while traditional tobacco fades. And a quick programming note, remember to tune into the Boston Pops fireworks special this 4th of July. You can watch live in the US at 8 p.m. Eastern, right here on Bloomberg TV. Listen along on Bloomberg Radio or catch it anywhere on Bloomberg.com. Electronic cigarette startup Juul Labs is raising $1.2 billion to target the global vaping market. That's according to people familiar with the matter. The funding round would value the company at $15 billion, making Juul more valuable than some of Silicon Valley's biggest names. That's a huge jump for a company that's less than 3 years old. Bloomberg technology reporter Olivia Zaleski, who broke the news, joins us now. Thanks for joining us, Olivia. So a lot of people probably haven't even heard of Juul Labs. Well, tell us what it is and why they're raising so much money now.
Yeah, so Juul was created essentially as a replacement to the regular tar-burning cigarette. And the people who created it, they came out of Stanford. They thought, hey, we're going to create this product that will be better for you than smoking a traditional cigarette. It doesn't have the tar. It uses a vapor that you then inhale the nicotine. And they thought they were actually doing something really great for the world. The problem is teenagers love Juul, and it's become extremely popular in schools, especially among high school students, and it's become a very controversial product. So there are a lot of investors who are not willing to invest in it. However, we're seeing that a lot of investors are willing to invest in it because they are raising $1.2 billion, which is pre-money $15 billion valuation, post-money over $16 billion.
Well, that's extraordinary. And one of the numbers in your story that jumped out at me was that Juul has captured 68% of the U.S. e-cig market. And that's with companies like Philip Morris trying to get in here. So what did Juul do right?
Yeah, it's pretty remarkable. They just launched in 2015, and they already have 68% of the vape market. They're also replacing traditional cigarettes. We've seen Philip Morris's stock in this year alone go down about 24%. British American tobacco also down about 24%. Japan tobacco down about 15%. And what we're seeing is that e-cigarettes are growing. They grew about 3.5 percentage points this year, and cigarettes are going down. They went down about 4 percentage points a year. So people aren't necessarily quitting smoking traditional cigarettes. They're just replacing traditional cigarettes with vaping.
Right, and the U.S. Food and Drug Administration now is, of course, looking into this. They've asked Juul for more information, right, about how Juul markets to teenagers. So what are the regulatory challenges for Juul, and what are they telling the FDA?
Right. So in April, the FDA actually knocked on Juul's door and said, hey, we need to know more about this product. We need to know, what are the health concerns? You need to provide us with your research. You also need to tell us about your internal marketing materials. What were you talking about in meetings? Are you trying to target children? Which, that's sort of like an audacious ask. Juul, of course, says we do not target children. You have to be 21 years old to purchase the product.
Even though they have candy-colored flavors.
They've
presumably.
actually tapered that down. It's the other vaping companies. There's one called Candy Pens. It's interesting that they're targeting Juul because Juul's so successful, but there are lots of other vaping companies that actually have more kid-friendly flavors and colors.
And what about the health questions that Juul is likely to get? I mean, they could say this is a healthier alternative than traditional cigarettes, but still, I would imagine, not good for you.
Yes, some health experts say that it's not bad and it's much better than smoking a cigarette. Others are saying that it causes this problem called popcorn lung, which I'm still trying to understand, wrap my head around.
Doesn't sound good.
Yeah, it doesn't sound good. It's relatively unknown at this point. It's a new technology and it's a new product, so there are a lot of questions about it. What we do know is it's extremely popular, and this is one to watch. This company is on a rocket ship.
And last question, very quickly, they're raising $1.2 billion. What are they going to do with it?
So they're planning to expand outside the U.S. Juul isn't even sold outside. Well, it's actually sold in Israel, but they're going to expand even further. They want to go to Asia and South America.
Okay, Bloomberg's Olivia Zaleski, thank you very much. Coming up, back to Tesla's newly released production figures, why hitting this much-lauded milestone could be a double-edged sword for the car maker. And Bloomberg Technology is live streaming on Twitter. Check us out at Technology and be sure to follow our global breaking news network at TikTok on Twitter. This is Bloomberg. This is Bloomberg Technology. I'm Brad Stone in San Francisco. Back to our top story. Elon Musk hit his long-delayed target goal of producing 5,000 Model 3 sedans in a week. Musk went to great lengths to hit his mark, including constructing a giant tent housing an assembly line. Now the CEO has the challenge of winning over doubters who say this is not sustainable. Joining us to discuss Bloomberg Opinion's Liam Denning. Liam, fair to say that you are among the doubters?
Some healthy skepticism, I think, yeah.
What, they've hit this remarkable, threshold. Elon, it seems like he pushed the company almost to the breaking point to get there. The question is it sustainable?
Yeah, I think, fair play to the company. They hit their 5,000 a week target like they said they would. And I think, a lot of bulls will take some comfort from that. But I think it sort of misses the bigger picture here, which is, to be a profitable car maker, which Tesla has yet to prove it can be, they need to have sustained high volume, high quality production, and hitting that target in 1 week at the end of the quarter, kind of in a repeat of what they did at the end of the first quarter, it doesn't prove that. It hits a moment in time, it hits that one target, but it doesn't prove yet that they're on that sustainable footing.
You noted in your column that the burst week at the end of the corner does seem to set a new baseline for Tesla weekly production. Are you confident they can do that now at the 5,000 Model 3s per week?
It's tough to say. I mean, what I observed there was we're just going on the last 3 quarters, so it's not a huge number of data points. But in general, what they've done is they've hit these burst weeks at the end of the quarter, and then that kind of sets the average for the next quarter. So based on that, you might think they can indeed keep going at 5,000 a week. In fact, I think in today's release they talked about getting more to like 6,000. But I think the issue here is, can they do it profitably? And if I think about, for example, the tent that you highlighted, this second assembly line that they put up, now it looks like they made about 1,000 cars on that last week, give or take. And if they're working 24/7, which they seem to have been doing, that equates to about 1 car every 10 minutes. And that is nowhere near what you need to be getting for a profitable mass market car maker.
Liam, Tesla was so focused on this 5,000 cars per week goal, it really came to, in some ways, define what observers of Tesla were looking for. What's the next milestone or benchmark that people will be looking for to grade Elon's performance here at Tesla?
Well, I mean, you know, 2 things that will be interesting. One is obviously the results that come out in about a month, and there we'll see what the cost of that burst has been in terms of profitability and cash flow. Obviously, the other big one coming out now is the company insists that it will get to GAAP profitability and some form of positive cash flow. It's not quite clear what later this year. I mean, that is really the key for this company. It needs to show that it can actually turn a profit, produce a mass market car, and and become self-funding. Becoming self-funding is the key here.
Okay, profitability and self-funding. Bloomberg Opinion's Liam Denning, thank you for joining us.
Thank you.
Mobile co-founder Ziv Avaram is starting a new chapter with his new company, OrgCam. It uses similar AI technology as mobile, but for those with visual impairments. Avaram caught up with Bloomberg's Mark Barton and Vonnie Quinn in London to explain how the company came about.
My partner, Professor Arnold Shashua, and myself, we founded this company 8 years ago. And the idea was to assist visually impaired and blind people. So we developed a very small device, size of the finger, that you attach to the arm of any pair of glasses. And it can reach to you, identify faces, money notes, credit cards, millions of products, colors, and more and more and more.
Prince William had a little test, didn't he?
Yes.
What did he think?
He was amazed. And we tried to identify his face, and it worked perfectly.
Yeah.
And we did a demonstration how it reads. He was really excited.
You have high hopes. I mean, you think this could be bigger than Mobileye. And you talk about the tip of the iceberg. Why you...
Unfortunately, there are 350 million visually impaired and blind people in the world, which is not a good news, but it's a very big market. But because it's a reading device, also dyslexic people, which is 3 to 5% of the population, can use it as a reading device. And on top of it, senior citizens who can still read but get tired very quickly can use the device. So altogether, we combine all of these populations, is more than 1 billion people that can be assisted by this amazing technology.
Right, so it has a tiny little camera and also a microphone. I'm curious as to what your intermediate term goals are. Are you looking to raise more money? At some point, would you like to sell the company or perhaps float the company?
Now, usually we build a company to make it a real company. We did the last round in a valuation of 1 billion, which is pre-IPO round. And we plan to do a round which we'll call pre-IPO about a year from now. And I believe that 2.5 years after this round, we will start to prepare the company for IPO. As we did in Mobileye, I think IPO is not a goal, it's a process of building a company as a real company.
What is next for the products? You've got this down now. Do you expand on that somehow? What technologically are you working on?
It's endless development. What we have done now is just the basic features as I described. The next development is going to be speech recognition, for example. So you'll hold a document and you will ask the system, what is this? So OrgCam device will tell you this is your phone bill. You can ask, what is the total? The system will tell you the total is $200. Please pay it. You just put the document and that's it. So it's endless development. and we will improve more features and more, let's say, intuitive human-machine interface, that the use of this product will be very, very easy.
Can we talk about Mobileye? The reputation of autonomous drivers has taken, as we know, a bit of a dent. Uber suspending testing after a self-driving car killed a pedestrian outside of Phoenix. Does that damage the momentum towards a future where we have driverless cars?
I'm not in Mobileye anymore. I left after the acquisition. So you ask me as an expert that devoted my, let's say, most of my life in Mobileye. But I believe that the wave of building autonomous vehicles is so big that nobody can stop it anymore. Maybe some delays here and there, but the benefit to humanity is so great that eventually it's going to be part of our life. And I believe in 20 years...
Is that how long it takes?
No, in 20 years, I believe that some of the countries it will be illegal to drive anymore, because we the drivers are responsible for 90% of the accidents.
That was Ziv Aviram, Orcam Technology CEO and Mobileye co-founder. The global solar market could do something this year that it's never done before: shrink. Solar installations in 2018 may total 95 gigawatts, down 3% from a year earlier, based on the most conservative of three scenarios modeled by Bloomberg NEF. One potential reason for the decline: in June, China decided to hit the brakes on new solar installations for the rest of the year. Coming up, one of the world's largest cryptocurrency exchanges is going live with a new custody service. Details on Coinbase's new customers next. This is Bloomberg. From ride-hailing to bike sharing, Lyft is buying Motivate, the company behind New York's bike rental service City Bike. The move follows rival Uber's purchase of Jump Bikes, an electric bike rental company. While Motivate is focused on docked bicycles, it has begun to experiment with electric bikes as it faces increased competition from dockless bike and scooter companies. Terms of the deal were not disclosed. Just last week, Coinbase Custody accepted its first deposit and is now open for business. The cryptocurrency exchange says 10 hedge funds and family offices have begun using the custody service. The goal of the service is to safeguard digital tokens in a manner similar to traditional securities. Coinbase aims to have 100 large institutional customers by the end of the year, with as much as $5 billion in assets under management. Joining us now with more detail, Adam White, Coinbase Institutional VP and General Manager. Also with us in New York, Bloomberg Executive Editor and host of What'd You Miss, Joe Weisenthal. Thank you guys for joining us. Adam, maybe let's just define our terms. Not everyone is probably familiar with what custody means, what terms like cold storage means. So talk about what you guys have made live today.
In the very simplest description, Coinbase Custody launching today represents a way for institutions to be able to store their cryptocurrency in a safe, compliant manner. When people look at the space, right, there's been a history of security incidents. At Coinbase, we've always made security our #1 goal. And what we heard is, as we are moving into the more institutionalization of the space, large hedge funds, large brokerages said, look, we can't begin trading cryptocurrency until we have a safe way to store it. We announced at the end of last year we were going to begin building Coinbase Custody, and we launched it today, and we're already serving about 10 hedge funds.
Crypto prices have had a rough ride this year. They've been characterized by volatility for a number of years. Have institutional investors stayed out because of the absence of this kind of service? And will this maybe rectify some of the rough waters that Bitcoin and other assets are in?
So in fact, I think it's just the opposite. What we've seen with this recovery, right? We saw the price of Bitcoin nearly touch $20,000 at the end of last year. We saw the market cap of all digital currencies reach about $800 billion. That has since recovered and come down. what we found is institutions are actually more eager than ever, because what they've once thought is, hey, maybe this is a train we missed. Maybe this was the emergence of a new asset class and now we're behind. I think they feel that they have an opportunity to get in. And we're watching them do that thoughtfully and intelligently through services like Coinbase Custody.
Joe, do you agree with that? I mean, if you're a big institution, have you lost your appetite for investing and trading in cryptocurrencies, considering the depreciation in value this year?
Yeah, I do find Adam's answer to be really interesting and probably one of the most important questions or important themes for the whole space, because there's no doubt that the second half of 2017, particularly the last few months, there was so much interest in that institutional money, this wall of money that was supposed to be coming in. And it does seem like platforms like the Coinbase platform was what everyone said was missing, that as soon as there is the custody, a little bit of legal clarity, things like that, then that money would be coming in. And I've been fascinated to see this year how we have seen that build out of the institutional infrastructure, not only Coinbase's and others, totally coinciding with just this relentless selling. Almost no news whatsoever has boosted the price of any cryptocurrencies for any length of time. So really the exact opposite of the second half of 2017, where it's clear the infrastructure is being built out and the capacity for that institutional money has expanded, but it hasn't done anything to boost the prices at all.
Adam, is the demand from institutions the same now in July 2018 as it was when you announced this back at the end of last year?
Absolutely. I think it's greater than ever. And what we find with institutions is they do not move fast. Institutions are thoughtful, they're deliberate, they do reverse diligence on our firm, right? So we spend a lot of time with our institutional coverage group, headquartered in our New York office, meeting with institutions day in and day out, educating them on who we are, the processes we use. They really dig into things like cold storage, and they say, how do you do cold storage? How do I make sure that my funds are safely secured? And we bring in things like, here's how we used a Faraday cage to make sure that the random number generator we use to decipher the private keys to really store these funds safely was military grade, best in class. These are the questions that they spend a long time moving down that we work with them on.
What kind of competition do you see from the traditional custodians like JP Morgan?
We tend not to focus too much on competition, tend to focus more on what do our customers want. Certainly we think there's going to be an opportunity for Coinbase to probably work with others in this space. When you look at what institutions want, they don't want just one custodian, right? They actually want to store their funds across a few kind of best-in-class custodians. So we're in conversations with others in the space, just like we are with regulators and our customers constantly.
Joe, pretend Adam isn't here and tell me what you think of Coinbase's competitive situation right now among maybe the traditional custodians that might also be looking to get into this business.
Well, I do think it's pretty fascinating the way you seem to have two different sort of clusters of companies reaching towards the center. So obviously you have the upstarts like Coinbase and like others who all the time seem to be making inroads to resemble more legacy banking institutions, more legacy brokerage institutions, and so you also have entities like Circle and Square. And then you, on the other hand, you do have these very legacy organizations, which for a long time were very skeptical about the whole space and sort of dipping their toe into providing crypto services. And it does feel like some sort of bigger battle is coming, and it's unclear which side will win out. Something I'm curious about, though, from Adam is that obviously there's a debate about how this whole space will evolve, whether it's going to be very Bitcoin-centric or whether there's room for lots of different coins and protocols. I'm curious whether the institutions that are signing up early on for the new Coinbase service, how interested they are in holding a multitude of different coins.
Joe, it's a great question, and it's spot on. What we're hearing from our clients is they want us to expand to more countries and to add more assets. And right now when we launched, we're supporting 4 assets: Bitcoin, Ethereum, Bitcoin Cash, and Litecoin, with plans this year to add many, many more. That is at the forefront of our product roadmap. And as your colleague at Bloomberg, Olga Karif, kind of announced today with the introduction of this, we're starting with 4 assets, but have plans to expand to Asia and offer many new assets soon as well.
Adam, I'll give you the last question. You know, the price of Bitcoin and other crypto assets has just been on a steady decline almost all year. Is this the kind of thing that is needed for a restoration of trust in cryptocurrencies?
I mean, Brad, you know this better than anyone. Markets are not always rational, right? And I think to work in this space, you have to have a 20 or 30-year vision. Brian Armstrong, our CEO, last week put out a series of tweets where he said, look, been working in the space for many years. We see the market react with these kind of rapid run-ups and then a recovery. And every time it gives us an opportunity to stay focused on the mission, which for us is helping to create an open financial system, and continue to invest in the infrastructure and the resources to really bring this new asset class mainstream. So for us, we tend to look at much other metrics like the number of developers working in this space, the new teams launching, the number of daily transactions on any different digital currency. All those numbers continue to move up and to the right, so we're very optimistic.
Okay, Adam White, Vice President and General Manager of Coinbase Institutional, and Bloomberg's Joe Weisenthal. Thank you both for joining us.
Thanks, Brad.
Coming up, he was a driving force behind Amazon's Kindle and Alexa business. And now he's trying to bring music learning to the masses using the technology he helped to pioneer. Our conversation with Ian Freed next. This is Bloomberg. Voice-activated speakers are becoming a more prevalent part of people's lives. And the king of the smart speaker market is the Amazon Echo. According to eMarketer, 41 million Americans will use one at least once a month in 2018. This puts Amazon's market share at 67%. That's expected to drop to 61% by 2020, but still is almost double its biggest rival, Google. And more of those users are using smart speakers as a teaching tool. And that's something our next guest is making happen. Ian Freed was a former vice president at Amazon, where he led the teams that worked on Kindle, Alexa, and Echo. He's now the CEO of Bamboo Learning, a company he co-founded that is teaching kids all about music using, you guessed it, Amazon's Alexa. Ian, thank you for joining us.
Thanks so much for having me, Brad. It's great to be here. I've been a fan of your writing for.
Thank you. And we met many years ago when you were launching the Amazon Kindle. You know, tell me, what is Bamboo Learning?
Well, Bamboo Learning is a brand new startup that I co-founded, and it's set up really to create applications that are fun and interactive to teach kids as young as 6 all the way through teenagers and also adults different things that they might like to learn kind of casually in 5 minutes or less.
Music theory and learning music, as I recall it from my very brief attempts as a kid, is very visual, right? You're reading music, you're hunting for the keys on a keyboard or the strings on a guitar. So why is a voice-activated speaker the right forum for learning music for kids?
Well, that's a great question. We think there's a few things. One, it's supplemental to perhaps taking music lessons. And one of the interesting things my co-founder, Arena Fine, learned is that music teachers often won't teach younger children how to play an instrument until they can learn to read. And she and I both believe that children as young as 6 should be able to learn about music. And so we have some examples actually of a 6-year-old learning with Bamboo Music and deciding after interacting with Bamboo Music and doing some of the questions and answers that we have interactively that she'd like to take a lesson. And so she's now learning the ukulele, and she's not yet a strong reader, but she is already learning how to play music based on starting with Bamboo Music.
Ian, Bamboo Music now joins thousands or even tens of thousands of other Alexa skills. For those folks who aren't part of the audience of Bloomberg Technology, how do they find it? And I guess I'm asking you this as a former Amazon executive. Like, how does Amazon solve the discoverability, problem with the Echo, considering now this explosion of new apps that are available for the device?
Well, it's a great question, and each application developer, so we at Bamboo Learning, have to do our own job at getting the word out about Bamboo Music, so that's part of it. But Amazon just created this new feature so that when you talk to your Echo and you'd like to try out, for example, Bamboo Music, all you have to do is say to an Echo, Alexa, enable Bamboo Music, and it'll start the skill, and it'll start explaining how it works. So we have to do our job, and Amazon is increasingly finding ways to make the skills much more available to customers. You can also just go to the Amazon store and search on Bamboo Music and find it that way.
We don't have a lot of time left, Ian, but I just wanted to ask you about your personal journey here. You've gone from being an inventor of the Echo to a developer for it. You know, why leave Amazon to go do this?
Great question. I had an incredible time at Amazon, worked there for over 12 years, and I learned quite a bit across the board, from business to technology, et cetera. And I just felt like it was time to try something new. I wanted to get back to do some coding, which I haven't done in a couple decades. And it just started as kind of a fun project. And then with my co-founder, who's an absolute expert in K-12 education and music, we thought it would be really fun to just educate through the Bamboo Music skill.
Okay, can't wait to try it myself. Bamboo Learning CEO and co-founder Ian Freed, thank you for joining. And that does it for this edition of Bloomberg Technology. We're off Tuesday and Wednesday for the 4th of July holiday, but we'll return later this week. That's all for now. This is Bloomberg.